Everyone, my name is Swarup Arsu, and today I will be presenting my project on financial performance analysis using business analytics. This project was assigned me by pre-read. In this project, I have combined traditional financial statement analysis with modern analytical techniques like ratio analysis, correlation, regression, to evaluate the overall performance of company. This process helps not only in understanding past performance but also in predicting future trends. In today's business environment, financial data plays a very important role in decision making. However, just looking at the number in is not enough. With need of We need to analyze, interrupt, and convert data into insight. In this project, I have analyzed the company financial data over over the last 5 years to identify trend, strength, and risk and opportunities in it. Now, this is the balance sheet. This sheet represents the balance sheet of company TCS. It includes key components such as total asset, total liability, and shareholder equity. By amazing this, we can understand how the company is managing the resources and whether it is financially stable. This sheet shows profit and loss statement. It includes revenue, operating profit, and net profit. From this data, we can evaluate how efficient the company is generating profit and managing its expenses. A stable or increasing profit margin reflects good operational efficiency, while fluctuation may indicate cost or revenue issue. This sheet represents the cash flow statement. It shows cash inflow, outflow from operating, investing, and financial activities. Even if a company is profitable, strong cash flow is essential for the survival and growth. Positive operation cash flow indicates the company's core business is generating sufficient cash. Ratio analysis. This is one of the most important part of the analysis. The ratio analysis. Here we evaluate the company using different categories like profitability, liquidity, and solvency ratio. Profitability. Gross profit margin is around 42 to 44%, which is slight below the industrial benchmark. However, net profit margin is significantly higher than benchmark, indicating strong cost control and efficiency. Returns. Returns on equity and returns on capital employed are also higher than industrial level, which means the company is using its capital very efficiently. Liquidity, current ratio, and quick ratio are constantly above 3, which shows excellent short-term financial stability. This means the company can easily meet its short-term obsession. Solvency, debit to equity ratio is very low, around 0.07 to 0.09. This indicates that the company is not heavily dependent on debits and has very low financial risk. Overall, the ratio analysis shows that the company is financially strong with high probability of profitable and strong liquidity and low risk. Now, correlation. This correlation help us understand whether two variables moves together. For example, revenue and profit. Regression. Regression helps us to understand impact of one variable on another and is useful for prediction. This sheet shows the result of regression module. This result indicates the strength and reliability of relation between variables. The strong model help in making accurate prediction and supports data-driven decision making. Now moving to red flags. This sheet highlights the potential risk areas or red flags. Although the company is performing well, there are slight variation in some metrics over the years. This fluctuation need to be monitored to avoid future financial issues. Now moving towards dashboard. These dashboards provided a visual representation of key financial metrics as it includes graphs for ROE, ROCE, profitability trends, liquidity ratio, and debit levels. From the dashboard, we can clearly see that profitability is stable, liquidity is strong, and debit is low or approximately zero. The dashboard 2. This dashboard compares company performance with industrial benchmarks. It helps us understand where the company stands in market. The company performs better than industries in the most parameters. This slide shows the structured data set used for analysis, which is dashboard data. It includes the year-wise ratio, category, and benchmark values. There are some strategic insights based on the analysis. Some key strategy insights are the company has strong profitable and efficient capital usage. It maintains excellent liquidity and has very low financial risk. This indicates strong financial management and stability. The executive summary. In summary, the company shows strong financial performance across all key areas. It is profitable, financially stable, and well positioned for future growth. Thank you. Thank you for attention. I hope this presentation provides a clear understanding of the company financial performance of TCS.